Good afternoon. Very warm welcome to this webinar on making natural capital work for you, supported by Stratton Parker. This webinar is the first in a series of events on natural capital taking place this year, both online and in person. My name is Judicaelle Hammond. I'm the Director of Policy and Advice at the CLA, and it is my pleasure to be chairing today's webinar. Our panelists today are Ed Trevor Barnston from the Barnston Estate, Tom Curtis, who is a founding partner at 3 Kale, and Matthew Haig, who is a director in the land management team at Stratton Parker. I will ask them to introduce themselves in a few moments, but before I do, let me run through a few logistical details. If you'd like to ask a question, either to a specific panel member or to the whole panel, please use the Q&A function of Zoom at any point during the session. You may already have spotted the Q&A button, which is appearing on the slide. It's at the bottom of your screen on the Zoom toolbar. However, unlike previous CLA webinars that you might have attended, we won't have a separate Q&A session today. Instead, I will weave your questions into the panel's conversations. So if you have a question, please submit it as soon as it comes to you. Finally, on logistics, I should remind you that today's session is being recorded for delegates to watch on demand. Back to our subject matter. I hope that some of you today are taking part in a webinar on natural capital for the first time. And if you are, you're doubly welcome. And I will start with a quick introduction on natural capital and why it matters to landowners and land-based businesses. Natural capital means valuing the natural environment, its ecosystem, wildlife, and features as an asset, which, if managed well, can deliver a stream of benefits, both for its owners and for society as a whole. Now, the good news is that natural capital is of increasing interest to government, to businesses, and also to society at large. And with that comes a recognition that investment is needed to protect and enhance our stock of natural capital as a nation. Soon, this will be driven by domestic legislation in the form of the Environment Bill, its targets, and its provisions on biodiversity net gain. But it's also worth bearing in mind the private sector drivers, be they altruistic, environmental and social governance commitment, or hard-nosed measures to protect future markets and supply chains. And sometimes those categories merge and blur. Land managers are in an almost unique position to be able to directly improve natural capital and the environment. And as a CLA member, looking at your assets through the lens of natural capital should help you plan by highlighting where environmental value already exists and where it can be increased. The CLA is here to help you on this journey. Last year, we ran an internal project to assess the market, to survey our members and develop both our policy position and guidance for members. In terms of policy, we're now working with government both in England and in Wales, and in a group with other large trade associations to ensure that new markets and opportunities are developed with land managers' interests in mind. For example, we are the voice of land managers in a series of working groups which are currently developing standards for the natural capital supply chains. In terms of member support, let me quickly run through what is available from the CLA website. And I'm hoping that there will be a slide, as if by magic it appears. Thank you, Ali. So we've got a series of 3 guidance notes, which take members through an introduction to the topic, guidance on how to measure natural capital, and what to consider before entering environmental markets. We also have guidance and a template for putting together something that which we have called a rural asset management plan. Now, this goes broader than just the environment, but it gives a basic, easy to follow framework for identifying natural assets and options on how to manage them. We're also planning to create a natural capital directory, which will list businesses which provide natural capital services, be they natural capital audits or natural capital brokerage services. So I would now like to turn to our panel. So if you could stop sharing the slide, that'd be great. Thank you. And if I can invite the panelists to turn their camera on. Thank you very much. So I'm going to ask each of you to briefly introduce yourselves and your business, and I'll start, if that's all right, with Tom.
Thanks very much, and thanks very much for inviting me this afternoon. I'm Tom Curtis. I'm a founding partner of a small business based in Oxford called Kale. We're small, but we're ranked by the Financial Times list of, we're ranked top of the Financial Times list of leading management consultants to sustainability. We specialise in understanding and advising on incoming sustainability risk for businesses, for commercial organisations and their investors. We do a lot of work, as you'd imagine, around climate and carbon. We do a lot of work around commodities that come from natural resources, on soy, a lot on palm oil. We do a lot of work on systems design, and then I do particularly a lot of work on strategy consulting for businesses and work on landscapes, and that's where my background is, and that's particularly what I work on, and I'm going to be talking about this afternoon, and especially in relation to something called the Landscape Enterprise Networks Programme, which I've been very much involved in developing in the UK and in other parts of Europe. And essentially what the Lens approach does is about natural capital. We design and develop trading communities for nature-based solutions. We build consortia of businesses who have a shared interest in nature-based solutions. We connect them to consortia of land managers who can deliver solutions against those nature-based solution demands or needs. And then we cut deals, we build more trades like that, and we build regional governance in a place. And that's probably my 2 minutes, I would have thought. So yeah, more later.
Thank you very much, Tom. Ed.
Thank you, Judicaelle. Well, great to be here and very much appreciated to be part of this committee. So I'm a CLA member, a vice chair of Cheshire CLA. I'm also a member of the Business and the Rural Economy, a national committee. But my main role is as the owner manager of Barnston Estate based in Cheshire. And we've got a number of diversified interests across dairy farming, forestry, residential and commercial properties, some renewable energy, and most recently a natural burial ground, which is going to be opening up in about a month's time. In 2019, I was fortunate to have been awarded a Nuffield Farming Scholarship, and my thesis title was Rural Estates Benchmarking Success, effectively trying to answer what does a really great estate look like? What are those elements? The short answer is it comes down to the total contribution of land stewardship, really. So people, planet and profit effectively is what I'm now undertaking for our estate. So it's the profit, it's also the social capital, and it's also the natural capital. And following that theme forwards, really, where I'm here today, I've been very fortunate in the last year or so. I've been awarded the Bledisloe Gold Medal Award for landowners. There was the Rural Business Awards earlier this year, winning an award for environmental and sustainability. And I've just joined the Welcoming Estates. They are the accredited trusted operator, really, for landowners. And I've just finished the business growth program at Cranfield University as well. So thank you, Judicaelle.
Well, you know, it sounds like you've been incredibly busy, and I'm looking forward to delve into some of the lessons learned from all of this. Matthew.
Good afternoon. Thank you for asking me to speak. As Judicaelle says, I'm a director in our farming and land management team. I'm based primarily in our, but I act for clients right the way across Gloucestershire, Oxfordshire, and into East Anglia as well. I've been with Stratton Parker for about 10 years now, and primarily my role is to advise landed estates in the management and growth of their rural assets and portfolio, covering everything from strategic advice right the way down to property management. It's a really interesting role, one that I very much enjoy. In terms of as a business, we obviously are a multidisciplinary firm, and I'm sure some of you may have worked with us in the past and still do so. We give advice across nearly every property asset class you can think of, which gives us a really broad spectrum of knowledge and ability to advise our clients. In Oxford, we have planning, development, valuation services and that sort of thing. But we, as a business, are increasingly focusing on natural capital, biodiversity, net gain, and those sort of emerging markets in that sphere. We have a number of research groups and working groups exploring markets for our clients in those areas. And in the last 2 years, have been working very closely with FTech, who are one of the most recognised providers of natural capital audits in the country. And that's been a really interesting and beneficial partnership for both clients and ourselves, I think.
Thank you very much. Thank you, all three of you, for joining us this afternoon. I've got a number of themes and questions that I would like to go through, and I think for the benefit of people who are joining us this afternoon, I'll just give them an overview of what we're going to touch on, and I'm sure there'll be more, but so that they can prepare any questions they've got. So we'll start with, why you've decided to get involved in natural capital as a business. Then we'll move to lessons learned. So what are the pitfalls, what has worked and what you would do again. We'll perhaps touch about the balance of planning versus doing, because among the people who have joined us this afternoon, there will probably be some people who've tried parts of natural capital approaches before and prefer to learn by doing, and people who prefer to plan ahead. And it may well be that one or the other is better. What's your experience? And finally, we'll ask you the question of, well, if somebody said to you, this is interesting, but I want to wait, what would you say? So we'll start with, why have you decided to get involved in natural capital as a business? And I'll start with Ed, if you don't mind. Why did you do it? And what is motivating you for the future, which is just as important, perhaps, as getting you into it in the first place?
Well, I'd probably start by saying, Judicaelle, there's two answers to that. There's the financial and then there's the non-financial. If I look at the non-financial for a moment, it's what you touched on earlier. It's the sense of altruism, effectively, recognizing that the land is one's greatest asset, and if you don't look after that, then what else do you have as a business? It's also a sense of leaving an enhanced legacy. It's building on-farm resilience post-BPS. And from a personal perspective, it's certainly fulfilling our natural capital ambitions under the triple bottom line. And there's also the social license to operate. And just on that for a moment, we put up a number of public notice boards on public footpaths about 15 months ago. And I saw that as our shop window, and it was a great opportunity to engage with the public, trying to tell them a little bit about who we are, what we're doing and why under the natural capital. And then we had this thing called lockdown, which purely by coincidence was this amazing opportunity for the great British public to go back out to reconnect with the countryside. And so from us, the impact has been quite extraordinary. We've had so many people re-engage with us, seeing why we are planting hedgerows and understanding what we're doing with pond and restoration and forestry management. It's brought out a huge number of people wanting to volunteer with bird species audits and plant hedges in the middle of winter. So it's been great from us in that non-financial side, very much yes, altruistic, but reputational, and it's great for us. The second part, really, Judicaelle, is on the financial side. So, most businesses will probably undertake some form of R&D spending. Natural capital is still very much in its infancy, and from my perspective, I felt we ought to be undertaking something that really protects and enhances us as a business over the next 10 years. And so if we can identify new diversified income streams, then that would be a sensible thing to go down. And you know, you look at some estates that are really leading on this, whether it's Knepp with their full rewilding, Blenheim, who have got a piloting exercise looking at the natural health service. These are mental health away days in the countryside rather than being prescribed antidepressants. So these are ways, if you want to be really blunt, they can be monetized, but it's still very early days. And my feeling is that there's well, gosh, there's lots of different examples. We're trying to restore about 100 acres of peat bog, which is under an SAC, a triple SI, and a Ramsar site, which is very exciting. There's the 15-acre nature park I want to establish, and I see that as being partly financial, but a great means of, again, re-engaging with the public. And it's a means of a quid pro quo for unlocking other opportunities across the community. There's riparian planting, and if we can get involved with water utility companies, and that's something that we're very much exploring. So non-financial as well as the financial is the short version of my answer, Judicaelle.
Thank you. That's incredibly helpful. And I know what you're saying about social capital as well as natural capital and the re-engagement opportunity. Moving on to Tom, how did you get into natural capital? Whose idea was that to make it, you know, make it potentially a paying proposition?
Yeah, thanks very much. It was definitely my idea at 3 Kale, and so I carry the can. But you know, I think they're coming round. No, it's good. I'm a bit like Ed, really. I think, you know, I think it's useful to look at this from the business opportunity side of it, and then from the impact side of it as well. Essentially, and that's how we look at it, and that's how I've looked at it. I mean, essentially, in the first instance, from a sort of business opportunity angle, many and several of our corporate clients across different sectors, you know, as we look at their sort of incoming risk in relation to sustainability and in relation to the performance of the environment, stuff that comes risk that comes from land or underperformance of landscapes is material to them, is material to several of them. And so several of the businesses we're involved with, food manufacturers, water utilities, and others, were starting to approach us to say, look, we've got a big factory in this place, or we've got a big set of plant or assets or systems in this place. They are not performing as well as they could because the landscape isn't tuned to their need as well as it could be. So essentially, we could start to fix up solutions for them from the landscape. And essentially what that means is building nature-based solutions. And essentially what that means is natural capital solutions that land managers could deliver. So it was literally just a sort of an ask for a service. It was a business saying to us, we're interested in resilient supply of crops from this landscape in the long term. Our shareholders are interested in how long we can continue to get crop off this landscape, and whether and therefore the long-term viability of our production plant. And in conjunction with that, a water utility might be saying to us, and has and do say to us, we're interested in looking at ways that we can use land to manage nutrients flows into water courses, or to help them manage their capital infrastructure programs and reduce costs, essentially. So essentially, very much a transactional opportunity, and one where we could provide sort of service to be able to spot solutions in the landscape and broker them. We could also importantly spot common solutions for different businesses who have different needs. From my perspective, that's interesting, it's useful, it's a service, but actually more importantly for me, you know, my background is in forestry and mixed estate management. I'm very interested and have been very interested in the ways in which the land economy serves the needs of society, and the shortcomings in the way that land economy doesn't always service all of the needs of society. And I think that these sorts of transactions we're talking about are means to wire up different demand elements of our economy and society to the things that the land can do. And I think that's good for society, it's good for the economy, and it's a great opportunity for land managers to deliver multifunctional landscapes, and therefore be delivering to multiple clients or customers. And to me, that seems like a great opportunity, and that's certainly what motivates me. It's certainly the sorts of things I thought about whilst managing a mixed estate is hang on, I've got other customers. Surely what things I do matter and deliver potential value to a range of other types of customers, the ones that I'm selling my crops and products to, essentially, in a simple sense. So so definitely business opportunity. It comes from a real demand that we've responded to, but it absolutely fits with my sort of theory of change and impact, which is if we can wire up a more complex land economy, which drives multiple benefits, that's good for the land, good for land managers, and it's good for society and the economy.
Thank you very much, Tom. Matthew, turning to you, what do you see as the benefits for an organisation like Stratton Parker of getting into natural capital?
I mean, being in the farming and land management side of the business, obviously our core client base is landowners and farmers, and it's obvious and has been for some years that natural capital is going to form a fundamental interest, people that own natural capital assets. And if we're going to be seen as a competent and more than competent, the go-to advisor for landowners, it's been apparent we've had to get our head around that for some time. We've had research groups, following the workings of Judicaelle from very early days of this sort of policy coming to inception, and it's been really interesting to follow actually how government policy has evolved over the last few years, and we're now gradually beginning to see this actually come into some form of marketplace. And I think the Environment Bill is going to be sort of key in delivering that, which is what you've mentioned. In terms of the opportunity for us as a business and what we think landowners will be seeking, I think Ed touched on it recently in his little introduction there around looking at estates holistically. I think he mentioned the 3 Ps. We tend to refer to it as the 3 Cs, which is cash, conservation, and community. Looking at the estate in the round, we call that triple bottom line accounting, and we do that for a number of landed estates. And the natural capital account is a very useful way of providing in a balance sheet style format some figures to the natural capital assets that landowners have. And that balance sheet approach is something that means that we can all get our heads around and understand it, which has been interesting. And I think a number of estates that we're involved with across the country, this has come to the fore often as part of a generational change in management, I think, as well, which has been a real key driver behind a number of the projects we've been involved with. And at the moment, we've got a lot of early entrants, which tend to be sort of larger estates or institutional landowning clients who are sort of on the front foot with this. But it's apparent coming down the line that the direction of travel from the government in terms of support mechanisms means that I think everybody is going to have to look at this quite seriously, and that from what we know of elms at this stage, it's obvious that natural capital is going to form a significant part of that scheme. So if you want to have some sort of government support in the future for your landowning and farming business, I suspect we're all going to have to understand this perhaps better than we do now.
Thank you very much. So actually, I was going to go into my second question, but there is a question that's just been posted, which I think is relevant to what we've started to talk about, which is what do we use as a red book or a green book style figure set to put a financial value on natural capital? And there was another question earlier on about the link between natural capital and carbon, which you might want to take together. So let's start with those, and then perhaps we can go back to your experience. I'm going to probably ask Tom to start with that one.
Yeah. The thing is, those books aren't fully written yet, are they? There's been lots of attempts to write them, and there's been a lot of theoretical valuations around. And I think for some ecosystem functions or natural capital values, I think that there will be, prices for them out there, essentially fixed prices out there for, carbon. You can imagine that there are prices around that, and those fungible values, I think will come maybe valuable like that. I think, though, a lot of the value that we're delivering from landscapes is actually dependent on the market for them in the place. You know, a flood risk management product or a nutrient management product is not a fungible value that can pass around the country or trade on. It matters to the person who's paying for it. And so there's an interaction there. That's a market. That's a local. That's a negotiated price, a price discovery, essentially. And so I think it's not all going to be straight. There's going to be common valuations. I think there'll be variability, but I think that will depend on the precise nature of the service we're talking about.
Okay, thank you. And before I ask Matthew how you value natural capital at this early stage, when there is no defined income to capitalize, which is a question that has been asked as well in the Q&A. Perhaps, Tom, can I on something that you said in your introduction, which is about supply chains. So you talked about risks in the supply chain, and we've had a question coming in on that. How can you incorporate natural capital into supply chains more broadly? Is it all within the farm gate? How do you see that evolving?
Yeah, I mean, the way we experience that is that there are retailers or food manufacturers who perceive that there's going to be variability or potential risk in the supply of a particular crop or livestock product from a landscape, and that might influence their ability to source from that place, and essentially that's a risk to them, and so the way that shakes out is it's not that we then assign that across to a natural capital valuation. What we assign that across to is, are there ways in which land management could be done which will ameliorate that risk, and therefore can that food manufacturer or retailer be sending a price signal through to their suppliers, or be paying specifically for interventions to happen in that landscape which change or reduce that risk? And that might be, for example, around the reliability of production of an arable crop to a particular specification for a processing plant. Essentially, that might become variable because of soil moisture regimes may vary a lot because of climate variability. They may be worrying about that on into the future. Now, one way in which they might start to manage that risk is to be having a conversation with their suppliers about soil organic matter and how that might influence soil moisture regimes. And it's a very technical conversation, isn't it? It's very transactional, and it's about actually if things are being done differently on the land, that helps the risks that we've got. Therefore, there's value to be generated there. Therefore, there's a conversation to be had and the deal potentially to be struck. And that's how it comes about for us. And I think that's how a lot of it will come about, in those very direct transactional value exchange transactions, essentially.
Thank you very much. Matthew, on the question of valuing natural capital from your perspective.
Yeah, I mean, it's one of the most commonly asked questions, I would say, because it's generally been quite a confusing picture over the last few years. I think what has helped is that we're in the process of actually getting a British standard for natural capital accounting for organisations, which means that there is a sort of uniform set of standards which everyone is working to. And one of the main issues with early uptakers has been, well, if I go to your firm for a natural capital audit, what's to say in 5 years' time we're looking at a different set of standards? And I think that the fact that there is going to be a uniform standard, which I think is going to be agreed in June or July this year, that's going to offer a great deal of comfort. The second thing I would say is about valuation is it does go back to Ed's point, actually, in that I think it's a spectrum, in that there are lots of different areas of natural capital that you can plug into. It might be offering a service and getting value that way, or it could be something which is much more easily recorded, such as carbon sequestration, or in the future the sale of biodiversity units. And I think all of these things sort of fall under the wider umbrella of natural capital accounting. In terms of what at the moment our natural capital accounts actually look like. They do appear as a balance sheet style approach, and for those that are interested, we've, alongside this seminar, published a note on our Rural Hub page which provides an example natural capital account amongst that document, and provides a bit of an outline as to sort of what goes into it and the sort of valuation process. But the reports that we're producing with FTech essentially include looking at a whole variety of factors: soil, water, minerals, the ability to offer exercise, the ability to allow public onto land, etc. And there are now agreed metrics for valuation for all of those things, which we then build into a balance sheet. And included within that is things like carbon sequestration and that sort of thing. So, as I said, there is an example of that balance sheet available on our Rural Hub page if it's of interest to see any members.
Thank you. To move us on to the question of what you've learned in doing, taking a natural capital approach so far. What has worked, and what are the pitfalls? What are the things that you would warn others about? And I'll start with Ed.
Again, probably a two-part answer, Judicaelle. I'd start with the bad and then finish up more upbeat on the good. I suppose the bad is the sense that natural capital in and of itself has been too long in the shadows, and it's only just now becoming a mainstream conversation. So as a concept, it remains very nebulous and still fairly niche. And I think there's a lot of familiarity and catch-up that farmers, landowners and land agents really need to understand to ensure that they are operating properly over the next 10 years. I actually think this is perhaps the most exciting opportunity in land stewardship. My frustration though is the bad side is that there's probably just too little understanding, too little experience of natural capital and what it can offer. There's a sense
sorry, when you say too little understanding and experience, who are you referring to on the part of
farmers, landowners, and land agents? I'm being quite general in that matter. And I'd also say from myself as a talking to a number of different land agency firms, I've seen how charges can vary enormously. Some will charge on a per acre basis for one element, and it could be carbon. Some will charge a flat rate fee for a report, and they're just selling you a report. Others might charge you nothing up front whatsoever, but they might be taking a percentage of the recurring fees over the next 10 years. So whether it's a report on biodiversity or just carbon or something else specific, I don't think it's just a silver bullet that solves all of it. I think it's that holistic approach, and that's what people really need to understand. And understanding as a landowner your own geography and your own particular circumstances and nature of operations. There's no off-the-shelf solutions, and from a regulatory and political point of view, there is frustration, I think, from people I speak to, that yet again from DEFRA there's too little detail. What metrics are being used? What is the accredited, we don't have a British standard that Matthew was rightly talking about. How long should a contractual agreement be for? The good news is that I think if anyone wants to start with a natural capital baseline assessment, it will take probably longer than you anticipate. Is actually you come out the end and think that was very exciting. You learn a huge amount which you think you probably knew already, but actually you don't. You get a very different perspective of when you go through this. I think
really useful then to do a natural capital assessment, whether or not you then decide to enter the market, is what I'm hearing. Would that be right?
Yes, and my take was always as long as I'm mostly right, and that was critical, because we will have metrics that change. It doesn't matter. Once we have a different metric, or we have a different technology that would enable us to measure something more efficiently, at least I've got most of the data there, and any subsequent data just becomes an upgraded one rather than starting from nothing.
Can I ask you, Ed, a question about how local communities are taken into account in natural capital. We've had a couple of questions from attendees on how do you engage, and how do you make sure that, you know, the impact of the people on your geographies as you describe them is taken into account?
Well, we are very open. I mentioned the inverted commas, the shop window of these signs on public footpaths. That's been an excellent chance for people to come to our website and feed in with questions and feedback. We've got the website and social media. Again, we've got a very active PR team who are super, and that's an excellent way of telling people what we're up to. But increasingly, particularly over the last 6 months, I think that germ of an idea on natural capital and land stewardship has really started to take effect. It's always been an open dialogue. We've got nothing to hide whatsoever, and I think that again is just helping with the social capital to knock down barriers between traditionally what might have been seen as an estate and the community. We're now being seen more as one within the community, and that's really great. And
one final one before I turn to Matthew. There's been a question on how do you rank natural capital outcomes? What are the benchmarks, and how do you decide? How do you prioritize as a landowner? I'm going to be asking the question, the same question. How do you prioritize from the perspective of Tom and Matthew as well? But let's start with you on that one.
All right. From a personal perspective, we've got flood zone land, and we've also got dairy operations. So there are clearly key risks on slurry. Wales became an NVZ zone, I think last month at some stage. So, you know, the writing is on the wall. What we do as a diversified estate needs to be future-proofed. So we're taking a two-pronged approach. It's reinforcing successes, and it's also trying to mitigate some of those poorer performing elements. If it's about the monetization, carbon is an obvious one. Actually, it's reducing risk as well. So from my perspective, it's how can we reduce flooding, and it's a different approach to farming, and we're certainly very active with riparian planting, and we're trying to move our hedgerows up to 50 kilometres. So that's an extra kilometre every year or thereabouts for the next decade.
Thank you. So Matthew, in terms of the projects that you've undertaken with your clients, any things that you would recommend that people do, and any pitfalls that you would warn people against?
I think from our point of view, Ed's point is relevant in that there has been and there needs to be a learning curve across the whole industry about how we develop this, and the reports that we've been producing over the last 2 years have certainly evolved to reflect, you know, the lessons learned. So I do think that FTech we work with, I probably would say this, but they're very well respected in the industry, and they're able to produce a report which is, you know, recognised by both landowners, investors, and other institutions. So I think we can deliver a product that works well, and you know, you can take from it some really valuable information. I think from a landowner perspective, in terms of what clients are seeing and what we've learned from this process, it's at the beginning of it to have a sort of clear understanding of actually what you want to achieve by doing this, and then what steps you're prepared to actually take to alter the way in which you may farm or manage land to implement some of the things that are highlighted. And I think if you don't have a clear understanding of what you want to do with it at the beginning of the process, you can end up sort of paying for something which you then have a document in front of you that says, well, here's my balance sheet, but what else am I going to do with it? So I think it is getting to at the beginning of the process, understanding what you want to achieve, I think is key. And it is an evolving picture. As Ed says, you may at the end of it find things which you weren't anticipating. But I think that would be my takeaway point.
And anything you would suggest your clients avoid based on your experience so far?
I can't think there's anything particularly that I would suggest they avoid doing. I think, there are obviously a number of products in the marketplace at the moment. So certainly the institutional clients we've worked with, where they've got numerous advisors who advise them on a range of assets, they come to the table very well informed because they've been out there in the marketplace talking to a number of providers. And I would say that doing a bit of your own research before you step into this is probably worthwhile, because as Ed said, there is a range of services people are offering, and there's a range of cost that goes with that. So before you commit to anything, just make sure that you either are working with someone who is a trusted advisor and recognised, or you spend some time shopping around the marketplace to understand what you're going to potentially end up with at the end.
Thank you. Tom, I'm going to turn to you for a few questions now which have come from the audience.
Okay.
We've heard a lot already about the water companies. Who might be the other big players in the market in the next few years?
Yeah, I mean, I think I think that water utilities are really important in this. I think that housing developers, obviously, with biodiversity net gain coming on stream, really important. I think that I think we mustn't forget food manufacturers. I'm very interested in the idea that I think it's really important that we're focusing on nature-based solutions in productive landscapes, and I think there's value that goes into those. So these are multifunctional situations. So those are very important as well. Local authorities, and then of course when you get into carbon and carbon potential carbon offset markets, that knocks things wide open. I think the other one, which I think becomes of interest to us, is the range of businesses that are involved in things like placemaking. As particularly when we're looking at peri-urban landscapes, there's a lot. We find a lot of interest from businesses we're already engaging and transacting with, but also others as well who are interested in staff retention, attracting talent into regions. People with a strategic interest in the quality of a place might also be pitching into these natural capital transactions, essentially. So there can be a wide range. So I think from my perspective, it's not that there's a whacking great new industry hoving into view around it. It's the fact there are multiple parts of the economy. And if you look at the GVA breakdown of your region, there are multiple big parts of that region, of that regional economy, that you should be looking at and potentially attracting in as customers, essentially. If it, so a range, but deliberately a range, actually.
Thank you. And do you have a feel for what the value of the market per annum is now and might become?
Cracky.
My president asks the difficult questions.
Yeah.
Blame him.
I mean, I think it's hundreds of millions a year potentially, isn't it? It's big. It's big. I mean, the sorts of amounts of money that are invested in flood risk management and nutrient management, risk management within supply chains, biodiversity net gain, placemaking, aggregate all of those, and I think it becomes a significant chunk of the land management sector and the agricultural sector. So a heck of a lot if played correctly. And particularly if played in a way which doesn't displace core land management outputs like food production. If it's done in conjunction with, then I think that it can add a huge amount of value. And I suppose then if you look at the government as a procurer of nature-based solutions or natural capital, then it's Elm's budget, whatever that shakes out being and wherever that goes, is part of that. So then then you're going into an order of magnitude, you're going into large numbers again there, aren't you, essentially? So
I think the interesting thing is that, this obviously covers things like carbon sequestration as well. And it would seem from our sort of dabbling in the carbon credit sales market that, yes, the government have had a significant impact on that marketplace through their sort of reverse auction process. But you can now get quite good prices in the private sector for selling carbon units. And, I think that that sort of evolving marketplace across all of the contributing factors under natural capital will mean, as you say, it's going to be a huge marketplace. And it feels like the next one is probably biodiversity units through when the Environment Bill takes effect. That could have a significant impact on the sort of the landowner and developer relationship.
Yeah, just the thing that I just partly my bridling here, is. I mean, exactly as Matt's, and I wasn't bridling at what Matt said, I was bridling at putting a price on it, is I think there is really big opportunity, but I think it's really important that one doesn't lose one's head around this. I think there are, if things are deployed too rapidly and too much at scale, then there are potential downsides and perverse outcomes. I think that sometimes some of the excitement around the scale of potential investment and finance that might come in, or the policy outcomes, actually might make people might result in oversimplistic land management solutions which are not responsive to the particularities of place in terms of businesses in different regional differences in business models, in community, in culture, and in the ecology of place. I think that, and also the opportunity to integrate multiple outcomes. I mean, one concern for me is if it goes too quickly, is that we get a sort of binary landscape of carbon over here and production over there and biodiversity up there. And I think that so I think that we mustn't lose our heads. It's important to integrate.
That's a really interesting and important point, Tom. Looking at it from the farmer on the ground, we've got a couple of really good questions in the Q&A. One that says, this is all quite daunting for the smaller landowner. How can smaller landowners start thinking about taking a natural capital approach on their holdings? I'm going to come to you, Ed, in a second. Oh, yes. And the second one, which is slightly similar, how does a small livestock farmer actually make money from this? Would it be better for that person to go into natural capital if, for example, they've got livestock at the moment? Or would it be better to cease livestock farming? How do you see it? So Ed, small scale, what would your advice be?
Thanks. So I've just been jotting 2 points really on that. One was size, and the other one was livestock. I think size is irrelevant. What I'd say is it's what you are wanting to achieve, and if you find that you aren't big enough, then it's a great opportunity to then start collaborating very openly with one's neighbours. So certainly in Cheshire, there's been a few of us here where we've got CHEP, the Cheshire Eco Project, and by collaborating, we've got 27,000 acres in theory that we would want to, over the next generation, really start to take on a landscape scale to make a dramatic difference. So it'd be everything from farmland to flood-prone areas, woodlands, commercial areas, hedgerows, permanent pasture, and there is something almost there for any species of wildlife. But collectively, even if it's just a very small holding, you tot up all of those farms together and it becomes very exciting. And I think local authorities with all their council farms are still very much behind the curve. So that's one on size. In terms of livestock, gosh, there's a chap called Stephen Briggs who is doing some really exciting work on silvo-arable. He doesn't actually have livestock, but nevertheless, the theory is that if you create multiple rows of trees, they can be fruit trees, they can be any variety of tree really, but by having fruit trees in his case, he is now a 3D farmer. So he's got apples and pears at the top end, and then at ground level he's got his traditional arable crops, and below ground he's got his carbon sequestering healthy soil, and all of that ensures that the trees are reducing wind, the roots are preventing flooding, and it's deep rooted, so it's helping with drought as well. So whether it's livestock or arable, actually it's a tweak of how you farm, my advice would be to go and engage with a consultant or a neighbour, and just start over a coffee, start kicking around some ideas what you want to achieve. And I'm sure pretty quickly you'll find other people who also have an approach, and sharing that information, actually, 1 + 1 does equal 3 sometimes.
Thank you. Anything that either Tom or Matthew want to add to that briefly, please, because I have one final set of questions for you.
Yeah, very, very briefly, I'd really endorse what Ed's saying there about club together. We find in procuring outcomes, if farmers can we work together as a cluster or as a group, they can deliver better, more joined up solutions, and that's good. It's good in terms of delivering value to the customer ultimately in this. But importantly, they've got better ability to negotiate and navigate the market and get a more equitable deal out of it. Yeah. But by acting together, they can get a better transaction.
Thank you.
I think my final comment on that would be that I do think that this will have to become much more accessible to every size of farmer in terms of how these are produced and how we assess natural capital over the next few years. Because if the government genuinely do want large-scale uptake on elms, this will have to be something that anyone can get themselves involved with, and is easily understandable. So I think that no matter what size you're operating at, this market will evolve over the next few years, and you'll be able to gain access to it at some point.
You're beautifully cueing me for my last set of questions, which is, if somebody told you now, this is potentially interesting, but I don't know exactly. So we've got a few questions on the Q&A saying, how do I know what I'm letting myself in for, and how do I know that now is the good time, given that there are no prices, etc., etc. So what do you say when a client says to you, is this real, and should I press the button now, Matthew?
Well, I think, as we've highlighted, natural capital itself covers a massive area. So some aspects of this market are already there. If you wanted to go and look at doing carbon sequestration, there is already a well-defined market for that. If you wanted to look at assets offering up land for biodiversity, net gain for developers, there are already means of registering land for interests, and frankly, some local councils already make it a requirement that you have to offer net gain as part of the planning process. So these deals are ongoing. I've got 2 or 3 at the moment where we're offering sort of biodiversity net gain and services by landowners around development. So I think that side of it already exists. If you're thinking about a straight natural capital audit, I think it really depends on what your level of sort of personal interest is and what you're hoping to gain from doing it. Those are probably the big determining factors about whether you step in and have it done now. But I don't think it can do any harm, and it can reveal some really interesting facts about the land you're managing, and might help to steer the way you build your next 5 or 10 years of management, and should be, I think, part of that process anyway.
And what would you say to somebody who says, I'm interested, but I'm not sure about now?
Yeah, I mean, it's evolving, isn't it? So you can see why people wouldn't want first mover disadvantage, and where's elms going to go and all that sort of stuff. But the thing is, it's not all in or all out, is it? I think getting in to some extent, getting involved in some degree, but not signing over your whole land to it and getting out of what you're doing at the moment. I think starting to work on it, starting to do something, starting to build a consortium of others around you, and thinking about your marketplace and your potential marketplace, absolutely, because I think this is going to go somewhere, and you learn by doing, don't you? So do a little.
Very interesting. And Ed, finally, your view on that question?
I'd probably be a bit more gung-ho than Tom. I'd say you wait at your own peril. It's essential that you at least know what you've got and what you're dealing with, and that is your best form of insurance. There is the moral responsibility that you need to be, as Gove said, leaving land in a better state than we found it. And you talk to the next generation, and they completely understand that there is an onus on making that positive difference. And the worst case is you do absolutely nothing if you're running an estate. You might be all right, but you might find that tenant farmers aren't, and they don't survive post BPS. So that has an indirect knock-on effect on you as an estate manager. So I think there is, coming back to the responsibility, to really start to get to grips and have a better understanding.
Thank you. There's lots and lots of questions in the Q&A that we have either skirted around or not answered. And what I would say is I've spotted questions on tax. I've spotted questions on landlord tenants. An awful lot of that, not everything, is covered in the guidance notes that I mentioned at the beginning. And my lovely colleagues on the events side will be sending a post-event email with the resources so that you can find them, and also a link to this recording. But what I would say is, please do use, if you're a CLA member, do use the resources that we've already got for you. And if the answer that you're looking for is not there, please contact your regional office, who will then send them on to my team. And it's really, really helpful for us to know what people are thinking about, what they're worried about, because it then enables us to feed that back directly in our conversations with government and others. So thank you very much for all your questions. We're nearly out of time, so unfortunately we'll have to bring this conversation to a close. I mentioned in my introduction that today marks the launch of a new event series on natural capital that will run throughout the year. And that will also be an opportunity for participants who want to know more and ask perhaps some of the more detailed questions to do so. So I hope you will join us for the regional events, some of which are already on the slide that you've got in front of you. They will showcase what members are already doing on the ground, and they will also delve in more detail into some of the aspects that we started talking about today. I would like to thank Stratton Parker again for sponsoring this webinar. And I would also like to thank all our panelists, Tom, Ed and Matthew, for joining us this afternoon and giving us their time and the benefit of their experience. There are a few messages that I would like to leave you with that particularly struck me. One is there seems to be the start of a happy conjunction of need in terms of people wanting to future-proof their supply chains, risk management, and also need for diversification and also social engagement from the landowner's perspective. What I've also heard from the conversation is look at your key risk and how you can monetize action, carbon being the most obvious one at the moment. But what I think we've also heard this afternoon is the market is likely to be huge and is also likely to be very diverse in terms of your potential customers of the ecosystem services and natural capital. It seems that understanding what you've got now is a no-brainer and a really useful step to preparing for the future, whether you decide then to be gung-ho in the words of Ed and decide to do something about it now, or whether you want to wait for later. What Tom was saying is you don't need to go all out and certainly don't sign your assets over before you understand what the opportunities are and also what you might let yourself in for. In the words of Matthew, before you commit, shop around and understand what you want to achieve in terms of your land holding. Finally, always useful to hear, size doesn't matter. But acting together might get you a better deal if you're going, if you're looking at it from the perspective of either a small part of your land holding or indeed just a small holding. So being on a small holding doesn't debar you from taking part in this market. So we could probably have gone for another hour, and maybe we will in the future. But in the meantime, thank you very much indeed for your time, and I hope that participants have enjoyed today's session. So goodbye.